Let's get to Bob Pisani, see what's moving. Hey, Bob.
Hello, guys. Happy Tuesday. At least no SAC announcements to throw us off, although Europe's still down about 1%. Let's take a look at the sectors. Similar pattern to yesterday. Now, the semis are holding up all right because Xilinx is up, 10% or so. Consumer staples, again, outperforming. Defensive sectors looking a little bit better. But the cyclicals, again, like yesterday, industrials, energy, banks, again, down for a second day in a row. Banks had a great time last week. Not so good this week as yields have been moving back down. What's moving as well? These thematic tech ETFs, these investors just love buying these thematic tech ETFs, lithium and game ETFs, cloud computing ETFs, cybersecurity ETFs, 3D printing ETFs. Every day they move up on decent volume. Just a lot of investor interest in buying tech in this particular manner. The thing, though, is guidance. And what I see is, again, the lack of it. Big companies not really providing any kind of explicit guidance again. And this is a problem for the analysts. Caterpillar, 3M, Xerox, Stanley Black & Decker, Harley-Davidson, Raytheon, if you look at them. Corning didn't really provide any explicit guidance. LabCorp, again, analysts are trying to figure out what's going on in the fourth and first quarter. And without it, you see these earnings come out and very wide disparities between what the analysts are thinking and what the companies are reporting. Fortunately, generally, they're beating because the analysts, without any guidance, are being very, very conservative here. So if you see this number so far, look at this. We've got a third of the companies reporting here, 169 reporting, 83% are beating, way above, and it's still 20% are beating, but the average beat is 20%. That's huge with a third of the S&P reporting already. Remember, I keep pointing out, historically, they'll beat by 3 or 4 or 5%. 20% with the third reporting, that's an amazing beat. And yet, what we're seeing here is not a lot of movement on the stock prices, and that's a little bit disconcerting. I want to just show you what's going on here with Cummins. Cummins is a good example. They had a huge beat, 40% above what the median estimate was, and no analyst even got close to the number they actually reported. This is an historic high for Cummins. Now, they do engines and engine parts. The company, I think, highlighted exactly what the problem is with earnings season. The CEO, Tom Linebarger, we are encouraged by the recovery in demand across our markets in the third quarter. Visibility on future orders remains low, and the impact of the virus on economies around the world remains difficult to predict. That is exactly the problem. We are having a problem with the fourth quarter estimates because we are hostage to what's going on. Look at this earnings trends that we're seeing here, guys. Strong beats so far. Companies are beating, but we're not seeing a lot of price gains overall. Is the good earnings news priced in? Maybe, but it's more likely these macro factors these overlays are really making it difficult to figure out what the prices are. And those are, of course, the stimulus, the vaccine, and the elections overall.
Shepard Smith here. Thanks for watching CNBC on YouTube.